Hi friends, in the previous session we had completed the fundamentals portion, but today before I dive into the new concept, okay, let's quickly go through some important things that we had learned from the fundamentals, okay. So remember guys always that it is the management of the company or the entity who runs the business, and it is the management who prepares the financial statements, okay. Now the users of the financial statement, all these are users of the financial statement, okay. How would they rely on financial statements when management themselves are running the business and then they are only the ones who are preparing the financial statements? So for this problem, the concept of auditing came into existence. So an independent auditor is appointed and he checks, he verifies whether the financial statements as prepared by the management is proper or not, whether it is giving true and fair view or not. How will the auditor see this? He will ensure, he will say that the financials are giving true and fair view when he goes to the financial statements and the financial statements have been made by the management using the financial reporting framework. Let's say if it is a company, if management has made the financial statements following schedule 3, following the accounting standards, then the auditor will express a true opinion that the financial statements are giving true and fair view. Okay, now I told you here very clearly that auditor only expresses an opinion whether the financial statements are giving true and fair view or not. He does not guarantee, he does not certify that everything in the financial statement is okay. Okay, it's just an assurance. It's not a guarantee of something, it's not a certificate. Okay, all right. Then guys, we covered another very important concept that of internal controls. Okay, and I would again wish to draw your attention here that internal controls is also the responsibility of the management. Okay, so as auditors, what do we do about internal controls? Okay, now be attentive and understand this again. Internal controls will be implemented by management, yes. As an auditor, we would just assess those internal controls. Okay, why would we be assessing those internal controls? Because if the internal controls of the organization is adequate, chances of misstatements in the financial statement would be relatively low. And when the chances, or let's say when the risk of material misstatement in the financial statement is low, auditor would be more than happy because he would have to now do less of checkings. He would already know that okay, this company, the internal controls are really good. The chances of misstatements, chances of anything wrong in the financial statements is less. Hence, he is going to be happy. He will not be he wouldn't be basically putting much very extreme efforts now in the auditing. However, on the other hand, okay, let's say if I when I start the audit, I mean, I assess whether the internal controls of this entity is okay or not. And then I realize, their internal controls is really very weak. Then what is going to happen? Then, of course, it would make me believe that because their internal controls are weak, the chances of misstatement, that means the risk of material misstatement in the financial statements are high. Hence, I need to do more checking now. I need to be really very cautious. I need to check lot of things now to find out those misstatements. Hence, here my extent of audit procedures would be more. Okay, so please understand guys, as an auditor again, why do we even assess the internal controls? We assess the internal controls. Ultimately, I'm discussing a very important concept here. We assess the internal controls ultimately to decide as to how much work we will have to do in this audit. In technical terms, we assess the internal controls to assess the nature, timing, and extent of audit procedures that we have to do in the audit. Okay, all right. And then we also covered a very important, overall very important concept. This is important for the overall development of the concept of the subject of auditing. Okay, and we haven't yet started with any chapter, but when we start with the chapter, you'll realize that actually the entire audit syllabus of CA Intermediate, I'm going to teach you this audit process only in detail. Okay, so the audit process, let us quickly recall it guys. Okay, so number one, auditor's appointment will be done, and then once the appointment is done, of course the auditor Chintamani will be super happy. But once Chintamani's appointment is done, you need to understand the objective and scope of audit. Sir, what is meant by objective? Hare, why have you been appointed? If it is a company audit, your objective would be to express true and fair view whether the financial statements are giving true and fair view or not, whether if it's a audit of the financial statements. And then sir, you have to determine the scope of audit. Scope means in layman's terms, what all things I need to include in my auditing, what will be the coverage in the audit. And I told you this, that scope is mostly going to be determined by whom? Who is going to tell us the scope of audit? Sir, it is the law. If I am doing audit of company which is required as per Companies Act 2013, of course what all things I have to see, what all things I have to report will be governed by the law. If I am doing audit as per the income tax law, the scope will be given by whom? Income tax law. However, if I told you this, if Chintamani goes to HDFC Bank and the HDFC manager has asked Chintamani to basically come up with an audited financial statement, then perhaps the scope of audit is going to be narrated, or let's say, given by that HDFC Bank's policy or management. Okay. All right. Then once Chintamani understands objective and scope of audit, he needs to understand the entity. Understanding the entity means has to, at least before I start my audit, before Chintamani starts his audit, he should know what his client does, what business are they into, okay, whether they are a manufacturing concern or they are a trading business or they are into services. He should be aware of those things. And at the same time, read carefully guys, he is going to assess the internal controls also. On the basis of internal controls, whether they are adequate or not, whether they are weak, he is going to assess the risk of material misstatement. Assess the risk of material misstatement. Now again guys, I'm just developing your concepts here. Assessing the risk of material misstatement, it is just an assessment. It is not going to be very precise thing. I'm just going to, it's an approximation that okay, this might be the percentage or chance of misstatements in the financial statement. It can never be precise, right? It's just an estimation, because up until now we haven't yet started the audit. It is just that I was trying to understand the entity, and maybe I was discussing few things with the management, then I got to know about their internal controls. So accordingly, I thought, okay, I have assessed that this must be their risk of material misstatement. Now, according to this estimation assessment that I have made with respect to risk of material misstatement, I would now sit down and plan as to how many days will I be needing to complete the audit, how much manpower will I be needing to execute this audit properly, when should I be starting the audit, what would be the tentative date of completion of audit. All these things I need to plan in advance, and once the planning is done, then only I would be going to the client's place and do my audit procedures. I would be applying the different audit procedures. Sir, what can be the different audit procedures? Hey, I told you, if the client has land and building, how would you as an auditor check the land and building which is reflecting in the financial statements? So I told you, remember, you would do physical verification, but then it is not going to give you, sufficient and appropriate audit evidence. So you'll have to apply more procedures. You'll ask them for their registry papers, for the title deed, that this building belongs to you, proof, show me the proof. So you will ask for the various documents, and then with respect to valuation also, you might ask for the valuation certificate. So these are the different audit procedures. And upon application of audit procedures, what is it that the auditor gets? Auditor is going to get evidence. As an auditor, always ensure guys that you obtain sufficient and appropriate audit evidence. When I say the word sufficient means quantity, that I need to have, okay, this much quantity of evidence. And when I say appropriateness, it is, with respect to quality. Like for example, I told you the other day that you are not going to perhaps accept photocopies because originals are going to be more reliable, right? So we are going to learn about each of them, don't worry. Okay, from the evidences obtained, I am going to draw conclusions about each and every item of the financial statement, and then I would form an opinion on the financial statements. This opinion can either be unqualified opinion or qualified opinion or disclaimer or adverse. If everything in the financial statements is giving true and fair view, then I'm going to give unqualified opinion. I can also call it as clean opinion. Okay, so yeah, these are the different kinds of opinion we have, unqualified or clean. If let's say I have found one or two issues in the financial statements, but other than that everything seems to be, as per the FRF, financial reporting framework. So in this case I am going to qualify my opinion, like inventory has been, well, let's say valued at LIFO. So I am just going to give a qualification with respect to inventory, and I'll state that except for the item of inventory, the financial statements are giving true and fair view. Okay. Then disclaimer, if I am not able to apply procedures, if I am unable to obtain sufficient and appropriate audit evidence, I am going to give a disclaimer of opinion. And finally, if everything in most of the things in the financial statements are not as per FRF, they are not giving true and fair view, in this case, I am going to give an adverse opinion, right? So this is what we had covered up until now. Okay. Now, again, in the fundamentals part, we have some more topics, but then I'll take it later on when we actually start with the concept of standards of auditing. Okay. But now, what are we going to study today? So we are actually going to start with a very basic chapter. Okay. So if you can see chapter number 1, we are going to talk about chapter number 1. We are going to discuss chapter number 1 now. And now perhaps if you read the name, things will be very clear: nature, objective, and scope. Already you know the meaning of what is objective, what is scope of audit. Okay. So because of the fundamentals, you'll now realize that your, the topic will seem to be very easy. Chapter number 1. Okay. So let us start, guys. Now, before I start, I would want to discuss something like chapter number 1. The name is nature, objective, and scope of audit. But in my book, you'll see that what I do is one chapter also I divide into sub chapters. Okay. So this particular chapter, we are going to cover three main topics. One is very basic, like again, introduction to auditing. Then we are going to discuss about the various standards that we are going to learn for auditing, and then we are going to cover one standard, SA200. So this is the agenda. This is what we are going to cover in chapter number 1. At the end of each of these topics, you will find the relevant questions also, questions and answers also, as per the new study material also, everything is included. So once we are done with the concept, we are going to discuss those questions also. Okay. All right, guys. So let us now finally, let us start with the chapter number 1 of our CA Inter Auditing. From now, I can say that yes, we are about to start our journey with chapter number 1. So let us talk about first chap concept, introduction to auditing. And now here, probably you'll feel, sir, what are you teaching us again? We already know all these things. Yes, I taught you most of the things I gave you an overview in the fundamentals part, but now let us quickly go through as to what is given in the ICI material. Okay. So introduction to auditing, in the basics portion, number 1 is we have to learn the definition of auditing. Sir, this was very well covered in the fundamentals part, but yes, let us go through it, try and learn also. So what is auditing, guys? It says audit is independent examination, same definition that we had covered in fundamentals. Okay. So auditing is independent examination of financial information of any entity, whether or not profit oriented or not, and irrespective of its size or legal form. When such an examination is conducted to with a view to express an opinion thereon. Let me repeat it again. Audit is what? Independent examination. We had already discussed the importance of independence. Let me just quickly tell you again, guys. If I am doing the audit of a company in which my father is a director, probably I might not be able to act independently there. I might not be able to do the audit very honestly, maintaining integrity. What if there is some issues in the financial statements, but then because the company is my father's company, he is the director, I might not point it out in my audit report also. So here, because of the relationship which I have with my father, probably I might not be independent, right? So then this is going to defeat the very purpose of auditing. Auditing has to be independent examination, right? So yes, independent examination. Now, guys, independent, we are going to learn a lot about independence in one, in the next chapter also that we are going to take up. However, just some basic things about independence, let us understand. Okay. So what I've done here is this entire definition, though I have already explained it to you, I've just given certain analysis here also regarding this definition. So let us quickly go through it. It says, number 1, audit is an independent examination of financial information. Independence implies that the judgment of a person is not subordinate to the wishes or direction of another person who might have engaged him. It simply means, if I am the auditor, my judgments, my decisions, the decisions that I make should not be influenced by somebody else, and specifically the ones who have appointed me. Now that is why I told you, if I do the audit of of a company wherein my father is a director, of course I will have to follow whatever he says. Hey, you don't have to check the fixed assets, it's already okay. I'm saying no, I'm your father. Now probably I'm not able to exercise my own decisions on judgment, so in this case I'll not be called as independent, right? So what is independent? Okay, independence here implies that the judgment of a person, that means judgment of an auditor, decision making of an auditor, is not subordinate to the wishes or direction of another person. I am not being influenced. In simple words, I am not being influenced by the persons who have appointed me. Okay. The auditor should be independent of the entity whose financial statements are subject to audit, so that he can form an opinion without being affected by any influence. Audit independence increases auditors' ability to act objectively and without creeping into any form of biasness. I shouldn't be biased. That's it. So don't worry, we are going to cover more about independence in a separate chapter. Though it's a part of very fundamental and basic concept, but in our ICI material it has been given in some other chapter, so we'll cover it up. Don't worry. Okay. All right. Coming back to the definition, audit is what? Examination, independent examination of financial information. Okay, financial information they have used. I told you this earlier also, I'm repeating it again. Why financial information? Because of course we are going to give an opinion on financial statements, but how are the financials ultimately made? How will you be able to check whether the financial statements are okay or not? You will have to ask them for the underlying documents, underlying records. Like for example, journal. From the journal, the transaction goes to the ledger. From the ledger, the trial balance. You might have to check all of these, right? So we are going to, when I say audit, audit is an independent examination of financial information of any entity. This entity can be profit oriented or not. It can be an NPO, it not for profit organization, it can be NGO. Okay, it can be big in size, it can be small in size, it can be of any legal form. It can be a company, it can be a HUF, it can be a partnership firm, it can be LLP, it can be a sole proprietorship, it can be a trust, it can be a society. It can be anything, guys. Okay. All right. So with respect to this, let's analyze. The entity whose financial information is examined need not necessarily be profit oriented, like in case of business. It can be a non-profit organization also, like NGO or a charitable trust. Audit can be undertaken in respect of an organization, be it a small one or a medium or a large one. Further, it can be conducted for any entity irrespective of its legal structure. That means entity can be a proprietorship concern, it can be a partnership firm, LLP, private company, public company, society, trust, HUF, etc. Okay. All right. Now, the very last part of the definition of auditing, why is somebody even doing this independent examination? What is the ultimate objective, guys? Ultimate objective is to express an opinion on the financial statements. Express an opinion. Now, again, I have already emphasized so much on the word opinion. Okay, it is not a certificate. It is just one's point of view. Okay, opinion means what? One's point of view. Okay, all right. So the purpose of audit is to express an opinion on the financial statement. All right. Done. We are done with the definition. Okay, just repeating it for the last time for the purpose of retaining in your heads, retention in your minds. What is the definition? Auditing is, sir, independent examination of what? Of financial information. Of which entity? It can be any entity, of any entity. Okay, whether profit oriented or not, irrespective of its size or legal form. Why do we even do audit? When such an audit is done, when such an examination is conducted with a view to express an opinion thereon. Okay. Now, I've been telling you this, guys, that the concept of auditing came into existence because there was a problem which the entire world was facing. How would people trust financial statements which has been made by the management only? Right? So just to overcome this issue, we came up with the profession of auditing, right? So what is the outcome of auditing? Okay, if the financial statements of a company, let's say, is audited by an independent person, it is going to give assurance to the users of the financial statement, the banks, the shareholders, the employees, the creditors, the government will be able to trust the financial statements more, right? This concept is called as assurance. So please remember, assurance is the outcome of audit. Who is going to get assurance? The users of the financial statement. Who are the users? The 9 users that we had covered in the fundamentals. It can be the management themselves, it can be the shareholders, the employees, the creditors, the research scholars, it can be prospective investors, it can be the government. So many of them we studied, right? So please understand this. Auditing provides what? Assurance. It is a basic nature, its basic nature lies in providing assurance to the users. That means what? Providing confidence to the users of the financial statement, and such an assurance lends credibility to the financial statement. So people will now be able to trust the financial statements more. Fine, done. Okay, so yes, we are done with the very basic concept, a definition of auditing. Okay, I did not teach you anything new here. This was all covered in the fundamentals part, right? So I'll be a bit quick here. Now, next topic, points to be taken care of to ensure that the financial statements, FS's financial statements, would not be misleading. And I would want you to mark this as important. Okay, what is it that we are going to cover now, guys? Points to be taken care of to ensure that the financial statements would not be misleading. Okay, so what do we have to study here? Let's understand. The person conducting audit, that means the auditor, should take care to ensure that the financial statements would not mislead anybody. Okay, so we are just covering what all things should the auditor take care of, so that the financial statements would not mislead anyone. It would not mislead the users of the financial statement. So what all things as an auditor should I take care of? Okay, let's read this point, and this can be an important question. There are 6 points, there are no headings, and the reason I made you mark it as important is basically you have to remember here also the points. Okay, so let's first try and understand, and then I'll help you out to remember them as well. Okay, all right. So what are the things that as an auditor I'll have to take care of so as to ensure that the financial statements are not misleading to the users? Okay, so number one, it says the accounts have been drawn up with reference to entries in the books of accounts. That means the accounts have been drawn up. Okay, who will draw it? The management. Management is responsible for the financial statements. They are responsible for, the entire accounting process, right? So, but as an auditor, what is it that I have to take care? What is it that I have to ensure? I have to ensure that the accounts have been made or have been drawn up with reference to entries in the books of accounts. What does it mean? So any accounts which will be made, of course, it has to be backed by the entries. There will be journals, then there will be ledgers, and then the trial balance, and then the financial statements are made, right? So in simple words, if I give you an example, let's say if a company records sales in the book, okay, the auditor needs to check whether the sales are accurately reflected in the financial statements. And how will I see this? Basically, this involves, I'll compare the entries in the sales account. I'll compare the entries in the sales account in the books with the corresponding figures in the financial statement. So in simple words, whatever is coming in the financial statement should be in accordance with the entries which are made in the financials, in the accounts. Okay, all right. So accounts have been drawn up. Whatever accounts they have made, it is in accordance with the entries in the books of accounts. Very simple, guys. First, anyways, entries would be made, right? And from the entries, I told you the sequence, right? Entries, ledger, trial balance, and then the financial statements are made. So auditor just needs to see whether the financial statements are in accordance with the entries made in the financials, in the books of accounts. That's it. Done. Okay. Don't worry. Let's go through it quickly, and then I'll tell you how to remember. All right. Everyone now. Yes. Point number 2. The entries in the books of accounts. Entries. Now it says entries in the books of accounts are adequately supported by sufficient and appropriate audit evidence. So number 1 point was that the accounts are in accordance with the entries in the books, and now these entries in the books of accounts need, there has to be proof. For example, I'll tell you this. Okay, let's say if a company claims certain expenses in the P&L account, let's say they have shown traveling expenses. to the tune of 3 lakh rupees. Okay, so what is it that I'm going to check now? So let's say again, okay, let's say I'm going through the PNL. Okay, in the PNL they have mentioned traveling expenses to the tune of 3 lakh rupees. How am I going to check it? So I am first going to check the entries, and then whether these entries are genuine or not, I'll ask them for some supportings means documents that is going to basically support those transactions, support those entries. For example, let's say they have made one entry of travel expenses, let's say 15,000. So I'll ask them, what is the proof that you actually incurred 15,000? So they might show me invoices of the travel agent, they might show me the invoices of the plane tickets along with the copy of the tickets. So all these are what supportings. So what is the second point? Entries in the books of the accounts are adequately supported by sufficient and appropriate evidence. So guys, this is how you do the audit. If the company, if your client is showing travel expenses of 3 lakhs, think like an auditor now. You are of course going to see the entries, then you're going to ask for the documents and proofs. You might ask them for the various invoices from the travel agents, from the airline company. You might even ask them for, for all the vouchers relating to expenses. So these are called as supporting documents. Supporting documents basically, they substantiate whether a transaction actually happened or not. Now, for example, let's say the client has purchased an AC. They have made an entry in the books of purchase of this fixed asset, of this air condition. So how will you see whether this transaction, whether the entry is genuine or not? You will ask them for the documents. You will ask them, hey, give the invoice of the AC, whether you actually purchased it or not. Of course, you'll do a verification. Physical verification can also be done of the AC, but you might even ask for the invoice. And then let's say whether the company actually paid for the AC or not. You might check the company's bank statement also whether payment was made or not. So these are called as supporting documents. They basically substantiate a particular transaction, and this is how we do the audit, guys. Slowly and gradually I'm going to build your concept. Have patience and keep enjoying this journey. It's going to be a wonderful one, trust me. Okay, you will fall in love with the subject of auditing. All right, but then be attentive. Okay, I'm just trying to build up your concepts slowly and gradually. All right, so what are the 2 points that we just covered, guys? Number one, the accounts should be as per the entries. Okay, the entries should have necessary supportings or evidence, and also none of the entries in the books of accounts should be omitted. None of the entries. Let's say they bought a fixed asset, they bought this air condition, but then they somehow missed on making the entry in the books. So if AC has been purchased and the entry for the same has not been made in the books of accounts, the financial statements would not be correct, and ultimately the financial statements would be misleading. So omission of something also I need to check, guys. Okay, all right. So what are the 3 points? What is it that we are studying? Again, let me repeat. The person conducting the audit should take care to ensure that the financial statements would not mislead anybody. Okay, so how can we, what all things should we be checking? Number one, that the financial statements, the accounts have been drawn in with reference to entries in the books. Second, the entries in the books are adequately supported by sufficient and appropriate evidence. That means we have the necessary documents. You can even write, let's say you are going to see the invoices, the vouchers, it can be the bank statements. Okay, don't worry, guys, we are going to learn a lot about each and every item of the financial statement as to how we are going to do the audit. Okay, then again, a point with respect to entries, that none of the entries in the books of accounts have been omitted. Okay, so first 3 points we have covered. Next, let's talk about the entire financial statements now. The fourth point is basically the information in the financial statement is clear and unambiguous. Whatever information is there in the financial statement, it has to be clear. Okay, then only I can say that the financial statements are not misleading. So what do you mean by clear and unambiguous? So let me just give one example. Okay, let's say when I was checking the financials of a company, I saw the I saw the head miscellaneous expenditure, and miscellaneous expenditure uh, amounted to, let's say, 2 lakh rupees. Okay, so as an auditor, I might ask the management to basically give a breakdown of this miscellaneous expenditure, maybe in the notes to accounts, etc., for better clarity, so that people understand, okay, what constitutes, what all expenses are a part of miscellaneous expenditure. So what I'm trying to convey is financial statements should not be, unambiguous. It should rather be, very clear. Okay, all right. These 3 points we are going to combine together and understand. So the financial information, or let's say information conveyed by the financial statements, is clear and unambiguous. Next, the financial statement amounts are properly classified. So whatever figures are or elements or items are coming in the financial statement, it has to be clearly, properly classified, described, and disclosed, and it should be in conformity with the accounting standards. So in simple words, the financial statement should be in conformity with FRF, financial reporting framework. Okay, the classification, the disclosure, etc., should be in accordance with the accounting standards. Okay, now for example, guys, if uh, let's say the company has made certain long-term investments, so the auditor should ensure it is properly classified, in the balance sheet, it is properly disclosed. Let's say the disclosure is in accordance with AS 13. As an auditor, I need to ensure that AS 13 has been complied with, or not. I hope you have covered the AS portion in your accounts subject. Okay, so just give you an example. So what is it that we have to cover in point number 5, guys? That the financial statements are properly classified and described and disclosed in accordance with the standards on auditing, or let's say in accordance with the applicable FRF, financial reporting framework. Okay, and finally, the statement of account, the financial statements, gives a true and fair picture. It should give a true and fair picture of what? Of the operational results. Operational results, that means the P&L, and the assets and liabilities, that means the balance sheet. Okay, all right. So there are 6 points, guys. Okay, now if you see, the first 3 points are, guys, with respect to the entries. Okay, so if I tell you very clearly as to how you have to remember, number 1 is basically you have to see whether the, I'll just write that the accounts have been made. Okay, accounts, it is in accordance with the entries, or let's say, let me put it in this way, a logical manner, that it is on the basis of the entries that the account should be prepared, that the financial statement should be there. Okay, now these entries need to be basically supported, okay, by evidences. Okay, these entries need to be supported by evidences. And number 3, again, it is a point with respect to entry only, that these entries should not be no omission, because if some entries are omitted, again the financial statements would be misleading. So first 3 points are with respect to entries. Okay, how do you remember? Number 1, that the accounts have been made with reference to the entries in the books, or you can say conversely, that according to the entries in the book, the accounts are made. Then entries should be backed and supported by the evidences like invoices, vouchers, okay, bank statements, etc., and none of the entries should be omitted. These are the 3 points that we have to learn with respect to what? The entries. Then let's talk about 4, 5, and 6 are with respect to financial statement, guys. Point number 4, 5, and 6 are with respect to financial statements. Okay, that the financial statement should be clear and unambiguous. Okay, that financial statements must be in conformity with the accounting standard, the classification, the disclosure, the should be in accordance with the accounting standards, and financial statements should give true and fair picture. I have just written it in short, guys, for your understanding. Okay, financial statements should give true and fair view of the operational results, that means the P&L and the assets and liabilities. Okay, repeating for the last time, what is the question? It has been asked in the past exam, or let's say RTP also under the old course. So it's an important one. What is the topic, guys? What are the points to be taken care of to ensure that the financial statements would not be misleading? So 6 points. Remember, 6 points. First 3 points were with respect to entries, that the accounts have been drawn with respect to the entries in the books. Second, the entries are backed by sufficient and appropriate evidences. That means invoices, documents, vouchers, etc. And none of the entries have been missed or omitted. Okay, 3 points. Then financial statement should be clear and unambiguous. Financial statements should be made in conformity with the accounting standards, proper disclosure, proper classification, etc. And financial statement should give an overall true and fair view of the operational results. That means the P&L and also the assets and liabilities. That means the balance sheet. Done. Yes, simple topic. It's done, but mark it as important. Okay. Now, moving further, we have a next topic, basically, which is origin of audit. Okay, this topic is for self-reading, but let's quickly just go through it. You never know what can be asked in MCQ section. Okay, so it says the word audit originates from the Latin word, and because it's a Latin word, audire, we pronounce it as audire. Okay, Latin word. So the word audit, English word audit, has been taken from the Latin word audire. Okay, meaning to hear. So what is the meaning of audire? To hear. Okay, now back in the old times, in the medieval times, auditors used to hear the accounts read out to them to check that employees were not careless or negligent. So in the old times, in the medieval times, auditors used to hear the accounts. Okay, all right. And industrial revolution in Europe led to astronomical expansion in the volume of trade, and consequently the demand for auditors also increase. So we are just going back into the history as to how the profession of auditing, came into existence. So it backs, I can say, it gained popularity, let's say, in the industrial revolution as well. But even before that, the reference to auditing is found in the Kautilya's Arthashastra, even in the 4th century before Christ. It talks about fixed accounting year. It talks about the process for closure of accounts and the audit for the same. So, auditing as such, it's a old concept. Okay. However, now in India, again, I told you this, right? How would have the users been able to place reliance on the financial statements? Okay, so then they thought, okay, we have to create the profession of auditing. Somebody should be hired, somebody independent should be hired, who is going to check on the financial statements, who will basically check the financial statements whether they are giving true and fair view or not. But then who is going to do the work here in India? So what happened in 1949? The Institute of Chartered Accountants of India was established in 1949 under the Act of a Parliament for regulating. The purpose was for regulating the profession of chartered accountancy in India. So now, we as auditors, okay, if you actually you have if you want to be an auditor, number one, you have to qualify all the 3 levels of the CA exam, complete your articleship, okay, and then you become a member, okay, and then you will have to apply for something called a certificate of practice. Okay, that we are going to anyways cover later. But guys, understand, okay, auditing, okay, it is still in India, I mean, only chartered accountants, okay, can do the audit, like audit of financial statements of a company. It is only the right of a chartered accountant to do the audit and sign the financial statements. So that is why our sign, once we put our signature on a piece of paper, when we do the audit and we put our signature, it has a value, it has the power. It gives an assurance to the users of the financial statement that the financial statement is giving true and fair view. And that is why, because of that power that you are going to hold in your signature, you all have joined this chartered accountancy course. And let me be very honest and tell you something, guys. Okay, this subject, okay, is going to be your bread and butter. I mean, okay, because what happens is, when you have enrolled for a course under ICI, okay, you are going to become an expert. You are going to become an expert in the field of auditing and accounting. When you graduate as a chartered accountant, when you qualify as a chartered accountant, you would have an expertise in the field of accounting and auditing. Okay, and then we have the exclusive powers of doing the audit. If let's say it's a company, can a company secretary do the audit of the company, or let's say the financial statements? No. Can a cost and management accountant, he's also professional, can he sign the financials? Can he do the audit of a company? The answer is no. We have the exclusive right as chartered accountants to do the audit. Our signature has the value, right? Now, if I be very practical and tell you guys, see, you have so many subjects, right from foundation, inter, final, you'll be covering so many number of subjects. But let me tell you something very honestly, that when you become a chartered accountant, I've already said this, you are going to be called as an expert in accounting and auditing. Please understand, you are being taught taxation also as a subject, right? But you are not being taught taxation so that you become a tax expert. You are being taught taxation so that you understand what could be the implications of the same in the financial statements, whether the client has made the provision for taxation correctly or not. Okay, ultimately our main aim once you become a chartered accountant is going to be, main work, exclusive work that we are going to do is that of audit. Income tax filing can be done by anyone else also. It can be done by an advocate also. It can be done by a other tax practitioners also. So there we don't have exclusivity. Okay, income tax, you can as a chartered accountant file returns of your clients, but our exclusivity lies in the audit. Okay, I'll keep on going. Like, you have law, you must have studied company law, but the institute also doesn't want you to be an expert in company law. Who is an expert in company law? It's a company secretary. But then why are you teaching? Why are you being taught? Or why is company law there in your curriculum? So that once you are doing the audit of a company, you need to check compliances with the laws of Companies Act. You need to see whether Schedule 3, or let's say, all the laws relevant to the Companies Act have been followed or not. So that is why you need to know company law. Okay, why are you being taught financial management? You are not going to be an expert in financial management. Financial management expert is, let's say, generally an MBA or a CFA also. But then why are you being taught the subject of financial management? So that you know all those ratios and all, and once you do the audit, you can have a better understanding of the client by analyzing those ratios, by finding out those ratios in the financial statement. So ultimately, guys, what I'm trying to tell you is, this is the main subject, and you are being taught the other subjects so that you can do audit properly. Okay, even when you, if you have time sometime, someday, just open up the vision statement of ICI. So they clearly mention that any member, they want a student to become an expert in the field of accounting and auditing. So these are our expert areas. Okay, who you are also taught costing, right? But institute also doesn't want you to be an expert in costing. Who's going to be an expert? The cost and management accountant, right? So auditing is something which is going to be very much exclusive to us. Hence I told you that, yeah, this is going to be our bread and butter. Okay, and anyways, for this reason, probably the Institute of Chartered Accountants was established under an act of parliament in 1949. Okay, all right, next. It's so just give a plain reading to this topic. Next, we have objective of audit. Now, objective of audit also you know very well. I told you that in the intermediate level, we are going to learn about auditing the financial statements, right? So what is the objective of doing the audit of financial statements? So to express an opinion on the financial statements, whether they are giving true and fair view or not. When will a financial statement give true and fair view? Sir, financial statements are going to give true and fair view when they have been prepared in accordance with financial reporting framework. Sir, what is FRF? Hey, FRF are the rules and regulations which management needs to follow when they make the financial statements. Yes or no? Sir, what can be the examples of FRF? If you are a company, you will have to follow Schedule 3, you will have to follow AS, you might have to follow Ind AS. If it is a foreign entity, maybe they are following some international standards like IFRS, it may be US GAAP. Okay, so these are FRF. Okay, so what is the objective? So we are going to learn more technical definition with respect to objective of audit when we start another concept, standards on auditing. So I've just mentioned for your reference, we are going to do it in detail in essay 200. But for the time being, what is the objective of audit? You already know, the concepts from the fundamentals part. Let us give a quick reading. The objective of an audit of financial statements prepared within a framework of recognized accounting policies and practice and relevant statutory requirements is to enable an auditor to express an opinion on such financial statements. So objective of auditor to express opinion on the financial statements. Sir, what kind of opinion is the auditor going to express? He is going to express whether the financial statements give a true and fair view. True and fair view of what? Of the financial position, that means the assets and liabilities, and the operating results, that means the P&L of the enterprise. That's it. So guys, understand, in audit we don't give certificate, we only give an opinion. And different auditors, different chartered accountants might have different opinion. Certificate means whatever has been written is beyond, there is no second thought about it, it is 100% correct. But we never do such things in audit. Okay, we only express opinion. Now the relevance of opinion I'll keep on discussing in the upcoming topics as well. Okay, now one thing you have to understand, guys, in audit, when we say that the financials are giving true and fair view, we only see whether the financials are made in accordance with the Ind AS, in accordance with the AS, or let's say in accordance with Schedule 3. We see whether the financial statements have been prepared in accordance with the financial reporting framework. Okay, but when we do the audit, it doesn't mean when we give our audit report, when we express our opinion, we don't give an opinion whether management conducted their business properly or not, whether management, was effective in making decisions, whether they were efficient in doing business. No, we only see that whether the financials are giving, true and fair view, whether the financials have been prepared in accordance with FRF. If let's say they say our advertisement expense is 2 lakhs, we'll see whether everything, all the proof they have, whether they have invoices for the advertisement, whether they made the payments or not. We'll see this, and we'll see whether the format of the financial statements that they have made is as per Schedule 3. And then we say that, yeah, the financial statements are giving true and fair view. But we don't say hey, the management, there was no need to spend on advertisement, but they have spent. We don't basically judge or give an opinion on the management's effectiveness and efficiency to conduct the business. Audit is not such a thing. Okay, so just one line, very important for your understanding. Again, the user, however, the user, who is the user? See, we are coming across this word so many number of times, but the word user was actually is not defined. Hence, in the fundamentals part, I have clearly discussed who can be the different users. If you see, we have covered so many different users: management, owner, employees, etc. Right? Okay, so coming back to this point, the user, however, should not assume that the auditor's opinion, the user should not assume that the auditor's opinion is an assurance to the future viability of the enterprise. So if I give an opinion on the financial statements that yes, the financial statements are giving true and fair view, that doesn't mean I am giving an assurance on the future viability of the firm. This means I'm not giving an assurance that the firm is going to last for next 10 years. They are going to do very well in the business. No, this is not such kind of assurance. My assurance is only limited that to the thing that, okay, the financial statements have been prepared in accordance with the FRF. Okay, so what I'm trying to say, let's summarize. When I give my audit report, when I express my opinion in the audit report, it gives an assurance to the users, but it doesn't mean that I am basically giving an assurance to the future viability of the enterprise. No, I saw the financials, it is okay, I gave my report. I don't even know whether it is going to be there after 4 years or not, this company. Okay, or I am not giving any assurance on the efficiency or effectiveness with which management has conducted the affairs of the enterprise. So I saw that, okay, advertisement expense is 2 lakhs. I looked in for the documents. They had enough proof to show me that, yeah, advertisement expenses is 2 lakhs. I said, okay, did not see whether it was required to make an expense of 2 lakhs or not, whether, the same work could have been done in 50,000. No, I am not checking all this. I am not giving you an assurance that management has done its business properly. No, I am not giving an assurance on the effectiveness and efficiency of the management doing their business. So what are you actually giving in audit? I am only expressing an opinion that the financial statements has been made as per FRF by the management. That's it. Okay, all right. So yes, we are going to cover more on the objective topic when we start this standard. Okay, SA 200. It's standards. What are standards? I'll tell you later on. It's a topic that we have to take up. So soon we are going to start that. Okay, all right. Now comes another word. See, objective we had covered in fundamentals. We had even covered the word scope. We had even covered the word scope, right? And I told you again, I'm repeating that in very layman's terms, what is scope of audit, guys? Scope means the range of activities, the things that needs to be covered by the auditor during his audit. Okay, so but now we are going to learn or understand this a bit technically. Okay, so what is scope of audit? So in our ICI material, they have given this topic in two parts. Number one, scope of audit, what it covers. That means what all things are included in the scope of audit. And secondly, we have what audit does not include. So that means what is outside the purview of scope of audit. What is it that does not fall within the scope of audit? Okay, so let's understand. Now, scope of audit, again, I'm telling you, when you're reading this particular topic, always bring this in your mind. Sir, what is scope of audit? Scope means what all things we have to check in our audit. What is the range of activity that I have to perform during the audit? Okay, all right. Now, scope of audit, what it covers. There are 3 points that we have to discuss. Very, very simple points, guys. Okay, number one says full coverage. Full coverage. The audit of financial statements. If you are the auditor of a financial statement of a particular company, it says you should cover all aspects of a business. You are going to cover all aspects of a business which is relevant to the financial statements. Okay, so what does it mean? Imagine, guys, okay, I am the auditor, okay, and you are the management of a company. Your company has very recently started selling products online also. You have a showroom, you have an outlet where you make the traditional sales, face to face sales, but then you have started selling your product online also. So as an auditor, don't you think, guys, I should examine the sales transaction now? Okay, from both the aspects. I mean, your traditional sales that you were doing as well as online sales. Yes, because ultimately in the financial statements, the entire sales will go, right? So what is, when we discuss about scope of audit, number one point is basically you are going to do a full coverage of what? The audit of financial statement should cover all aspects of a business that are relevant to the financial statement. So that is why I told you, if you have started online sales, I will have to cover that also, because it is going to be reflected in the financial statements. So anything which is relevant to the financial statements, I have to include that. Okay, number one. Second, reliable information. Okay, now it says the auditor needs to make sure that the information in the accounting records, okay, or let's say I can put it in the simple way, that the financial statements, that the underlying accounts, the ledgers, the entries which have been made, it is reliable or not. The auditor needs to make sure that the information in the accounting records is reliable and sufficient for creating the financial statements. Again, let me tell you, guys, the sequence. It is journal which comes first, and then we have the ledgers, the trial balance, and the financial statements, right? So in order for the financial statement to be correct, the underlying records, the journal entry should have been correct, the ledger posting should have been correct, the trial balances needs to be correct, right? So it says the auditor needs to make sure that the information in the accounting records is reliable and sufficient for creating the financial statements. Okay, so I need to check upon the reliability. Okay, and I told you, like, right in the beginning when we were discussing the audit process, I did tell you this, that as an auditor, I would assess the internal controls of the organization. Why would I assess the internal controls? Do I have to give an opinion on the internal controls, whether the internal controls are good or not? No. Please be very attentive, everyone. I'm discussing a new concept here. I assess the internal controls to just assess. I basically evaluate the internal controls. I would assess the internal controls to basically determine the risk of material misstatement. How much misstatement can there be in the financial statements? I don't evaluate the internal controls with an intention to give an opinion on the internal controls. Please, everyone. In audit, I only express opinion on what? The financial statements, whether they are giving true and fair view or not. And in doing so, of course, in doing so, I do evaluate or assess the internal controls. Okay, ultimately, I'm giving opinion, right? Opinion on what? Whether the financial statements are giving true and fair view, right? In doing so, I do evaluate the internal controls of the organization, but we never express opinion on internal controls. We express opinion on the financial statements, the balance sheet, the P&L, the notes to accounts, the cash flow statement, changes in equity, statement of changes in equity. So, sir, why do we study internal controls? Internal controls are evaluated so as to assess the risk of material misstatement. Please, we never give comment. We never give an opinion whether internal controls are good or not. Though in some aspects we give, I'll cover it up later, but just stick to the basics now, that in the course of audit, guys, we only give opinion on the financial statements. Do we check the internal controls? Yes, we check, we evaluate, but not with an intention to give an opinion about internal controls which the management has implemented. We only assess internal controls to determine our risk of material misstatement, and accordingly we plan whether we have to do more work or less work in the audit. Accordingly, the planning is done. Okay, I hope you are clear on this. Anyways, so let's come back to the topic. We were discussing scope of audit. Okay, I told you a very important concept here, that with respect to internal controls, though the same will be repeated again a lot of times when we cover the internal control chapter as well. Okay, all right, so first thing, full coverage. Then whatever information we have, let's say in the form of accounting records, in the form of the underlying documents, the auditor needs to ensure they are reliable. And third point, proper disclosure. The auditor must ensure that the financial statements properly summarize the transactions and events, okay, and the relevant information is disclosed properly. It has to be properly disclosed. Okay, they also consider the judgments made by the management during the preparation of financial statements. So whatever decisions, see, financial statements are made by management. Okay, so when they make the financial statements, they make a lot of judgments. They make a lot of judgment. Let's say how much provision for doubtful debts has to be made. There is no formula as such, right? So it depends on the judgment of management. If they feel that, okay, these are the number of debtors from which money can't be recovered or would not be recovered, they'll make a provision accordingly. So it is totally based on management's judgment, right? Anyways, what is meant by proper disclosure? The auditor must ensure that the financial statements properly summarize transactions and events, and that relevant information is disclosed also appropriately. Okay, now let's say, I'll just give you one example. Let's say there's a manufacturing company, okay, and that company is involved in a legal dispute that might have a material impact on the financial statements. If they lose the case, they might have to pay a lot of money as compensation, let's say, in this hypothetical case. Now, in this case, if this happens, the auditor needs to ensure that the company discloses this information about dispute in the financial statements, maybe in the form of notes or maybe in the form of, disclosures. Okay, so this is what I am trying to convey, that there has to be proper disclosure. Okay, so this is within my scope to get, proper disclosure done in the financial statements if management has not done it. Okay, all right, guys, what are the 3 points? Scope of audit, what does it cover? 3 points. Remember the headings: full coverage, reliable information, and then proper disclosure. Okay, now what does this scope of audit does not include? Very easy points. It says, number 1, limits of expertise. See, I told you this. As an auditor, we are expert in the field of accounting and auditing, right? Now, if my client has a land and building, I am not an expert. So that seeing the land and building, I'll be able to tell that, okay, I feel that the land and building might cost around 3 crores. No, I'm not an expert. I'm not a valuer or a certified valuer that, I'll be in a position to comment on the value of the land and building. No, let's say my client, okay, he likes to collect vintage things. He likes to buy paintings. He has bought a painting of 3 crore rupees. As an auditor, how will I get to know, oh yeah, this seems to be 3 crores or maybe only 30,000? I'll not be in a position, right? Or let's say, my client happens to be a jeweler. He deals in, diamonds. So seeing the diamond as an auditor, will I be able to say, okay, this is this category diamond, this is a color grade of the diamond, accordingly the price should be this? No, I am not an expert in that. Even though, let's say if my client is a jeweler, the diamonds that I was referring to will be a part of the inventory. So then how am I going to verify those inventory? I don't have an expert knowledge, right? So the topic that I'm discussing here is Auditors are not expert in determining the physical conditions of asset like machines or its suitability and life of structures like buildings. Those require specialized knowledge. So in this case, what happens, guys, if let's say my client is into jewelry business and he has a lot of variety of diamonds, and I can't physically check the diamonds and determine upon the value, so maybe in my audit team I would include an expert. For this particular audit, I will ask an expert to be a part of my team, and he's going to assist me in getting the valuation of the diamonds and all. I might ask this, I might do this. So things which is beyond our scope, you don't have to do it. We can, let's say, we can get an expert also in our audit team. We'll learn about this later on. Okay, so auditors, I'm reading the line again. Auditors are not experts in determining the physical condition of assets or suitability and life structures like building. I cannot see the structure and the condition of building and determine its value, right? So those require specialized knowledge, and hence it is not in our scope, though it is an item which is going to be reflected in the financial statement. And of course, it's very important for our audit. So we might have to take the help of experts who are experts in their respective domain, in their respective area. Okay. All right. Next, no document authentication. Auditors can't authenticate documents. They aren't experts in verifying the genuineness of papers. So see what happens during our audit. Okay, I'll give you one simple example. Let's say I asked my client to give me a copy of their bank statement. Okay, you all have bank accounts, right? If you have a savings account, you get that passbook, right, wherein all your transactions are mentioned. Similarly, if it's a business, they must be having a current account, and I ask my client to get me a copy of their bank statement signed by the bank manager. Now, how would I know, guys? Imagine I'm the auditor, right? How would I know? What if the client takes a printout of the bank statement through net banking, makes a fake seal and just puts a signature, and they tell me, yeah, sir, see, this is a signature from the manager. Do you think I can verify this, that okay, this signature belongs to him? Or do you think I'll go to the bank and ask, hey, this is your signature? No. We auditors are into such a simple profession, humble profession rather, that if management of the company gives us a document saying that yeah, it is signed by the bank manager, we would tend to believe it. And anyways, guys, we are auditors. We are not somebody from CBI or forensic department that will be able to analyze the signature and understand whether the paper is genuine or not. No, right? So this is not within our scope to see whether signature is genuine, whether the paper is authentic or fake, etc. We can't figure it out. Okay. And very important again, guys, we are only doing audit. Again, let me tell you, audit is giving an opinion on what, whether the financial statements are giving true and fair view or not. Sir, how many times will you repeat the same thing? I'll have to. This is what I have to teach you for the next, entire, let's say, 30, 35, 40 days. Okay. Anyway, so again, let's focus on this point. Audit is not an investigation. We only see whether the financial statements are made in accordance with the financial reporting framework, whether they are giving true and fair view or not. But let's say it's not like an investigation which the police officers do. It's not like an investigation which the CBI will do. It's not a fraud investigation. It's not an investigation with respect to a scam, something has happened. Okay. Investigation is basically doing an in-depth analysis or investigating when there is something which is not correct. Some fraud has happened, some like murder has happened, something has happened, and then you must have seen in TV and all, right? Police will come and they'll investigate. But audit is not like this. Okay, let's understand. Auditing is not an official investigation. Auditors don't have legal powers for searching or taking statements under oath. Hey, we cannot ask our client, that please tell us, are you saying the truth or not? We cannot ask our client to basically take an oath first and then talk to us. No, we don't have legal powers to search. We cannot enter our client's office at 3 in the morning and secretly take out the documents. No, we are into such a humble profession that we inform our clients that yeah, we are your auditors. Tomorrow morning 9:30 a.m. we are going to come to your place and check that. It's not an investigation. Okay, so their focus is on providing reasonable assurance about the accuracy of financial statement. Now there is a word reasonable assurance which I'm going to take up later. Okay, for the timing I just told you that in audit, we just give an assurance about what? The accuracy of the financial statements. Okay, now the scope of audit is broad, covering the overall financial picture, while an investigation is narrow and specific. Investigation will be done if a company, let's say, is involved in fraud. So the objective is very focused here, that we have to find fraud. But audit is a broader concept. We only give an opinion whether the financial statements are giving true and fair view or not. So please remember, audit is different from investigation. These two are different things. Okay, all right. So what all things have we covered up until now in the basics? We started with the definition of audit. Then, very important topic, what are the points to be taken care of to ensure that the financial statements are not misleading? Okay, then we covered origin of audit, objective and scope of audit. All right, now let's start with the next topic, guys. Again, very easy. What are the different types of audit? What can be the various types of audit? Okay, so I'll give you an insight first so that you have a good understanding. Okay, now guys, there can be primarily two types of audit. One which is required to be done because of some law. For example, if you are a company, okay, then whether you are earning profits or you are incurring losses, because you are a company, audit has to be done. Why? Because Companies Act, it is mentioned there. So if you are a company and we are doing your audit in accordance with the Companies Act, it is a statutory audit. We call it a statutory audit. Why? Because it is as per the statute, as per the law. If let's say your turnover goes beyond 1 crore in one particular financial year, then we would also have to do your income tax audit under section 44 AB. Will the two audit reports be same under Companies Act and income tax? No, the scope are different. If I am doing your company audit, the scope will be different, and accordingly the reporting format would be different. When I am doing your audit from the income tax laws perspective, then the scope is different, my audit report would be different, the format would be different. Okay, so scope is going to be different. Anyway, so income tax audit, because your turnover exceeded 1 crore, so under section 44 AB of the Income Tax Act, you will have to get your financial statements audited. Where is it written? Income Tax Act. So is it a statutory audit? Yes, it is. So any audit that is required to be done because it is mentioned in law will be called a statutory audit. Okay, sir, then what is the other audit? Other can be voluntary audit. Remember now, recall, my friend Chintamani, he had gone to HDFC Bank to get a loan, and that manager had asked Chintamani to get the financial statements audited. Chintamani told, I am a sole proprietor. I have started my business, just started my business. My turnover is only 10 lakhs. So I don't need to get the accounts audited under Income Tax Act. I don't need to get it audited under the Companies Act. So manager, why are you asking me to get the financials audited? Manager says, no, it is as per our bank's policy. We will give you a loan only on the basis of your audited financial statements. So go to a chartered accountant and get your financial statements audited. Now, this audit requirement which Chintamani has to now undertake or get its financials audited is not because of any law. Bank manager has asked him, and hence we can call it as voluntary audit. We can call it as what? Voluntary audit. I'll give you a few more examples. I have in fact rather given you already. Let's just quickly recall them. So let's say there are two partners, Ram and Sham. Okay, and they want me to be their partners. And they asked me to bring 10 crores as capital and 2 crores as goodwill. So how will I just believe them and pay them this huge sum of money? So in this case, I'll tell, okay, Ram and Sham, I'll be your partner, but then I will hire one independent auditor and get the financials audited first. Okay, so here the auditor was hired because I wanted to just verify whether the capital contribution they are asking me to basically come up with, the goodwill amount, is it correct or not. So here audit was done, but then it's voluntary in nature because this requirement is not there in any law. Okay, so let's understand the two types of audit. Audit is not legally obligatory for all the types of business, organization or institutions. On this basis, audit may be of two broad categories, as I mentioned: statutory audit, which is basically audit required under law, and then we have voluntary audit. Okay, now what could be the statutory audit? It says statutory audit is authorized and governed by law or a statute. For example, these are just some certain examples. Companies governed by Companies Act, they have to get their audit done. Okay, then if it is a banking company, then the audit will be done in accordance with the Banking Regulation Act 1949. If it is just electricity supply company, then as per Electricity Supply Act. If it is a cooperative society, then as per Cooperative Societies Act 1912, the audit will be done. Okay, so these are just certain examples. Okay, now it says specified entities under various sections of the Income Tax Act also. So I told you, let's say for the timing, just write section 44AB of the Income Tax Act, just as an example. Section 44AB of the Income Tax Act, which requires that if your turnover is, let's say, more than 1 crore, then you have to get your financials audited under which act? Income Tax Act. Okay, all right. Now next, so this is what statutory audit means if it is audit required under law. Okay, next point, where the accounts of proprietary entities, partnership firms. Now partnership firm doesn't prescribe audit. I mean, you all have covered the Partnership Act in your foundation level also, right? Did you ever come across this, that the partnership firm needs to get the financial statements audited? No. But when you very recently covered company law in group 1, you must have come across this, right? That companies are required to get its financials audited. And then you read about the appointment of auditors also under section 139 of the Companies Act, right? So for all the entities, let's say proprietary entity. Now, if I am a proprietor, can I get my financials audited voluntarily? I want to see whether everything is okay or not, whether there is, whether the financials are proper or not. So I can get it audited. It's my choice. Okay, then partnership firms, HUF, etc., they are not governed by the audit provisions of Income Tax Act. Okay, now Income Tax Act, as in if this proprietorship firm or partnership firm, if their turnover exceeds 1 crore, then Income Tax Act will come into play. But then let's say if this proprietorship entity or partnership firm, this partnership firm's turnover is only 20 lakhs, then is it required to get the financials audited? No. But if the partners still want, let's say the two partners don't trust each other. One partner feels, hey, he must have done some scam. He must have taken some money. So the two partners are not very sure about themselves. Even though their turnover is 20 lakhs, can they get their audit done? Yes. The two partners mutually decide that let's get an audit done. One partner thinking that now the other partner's scam will be, unveiled by the auditor, let's say. So the two partners may decide to get the financials audited. No issues. Were they required to get it done statutorily? No. Partnership Act doesn't prescribe audit, and then their turnover was also 20 lakhs. So as per Income Tax Act also, they don't have to get their audit done, but still they got it done. Voluntary audit. Okay. All right. So let's understand, guys. For example, some entities like schools may require to get their accounts audited for the purpose of obtaining grant or assistance from the government. For example, any entity, proprietorship entity might be required to get the financials audited to get loan from the bank. It can be anything, right? So primarily, guys, two types of audit, statutory and voluntary. Done. Okay. Now, again, a very theoretical question and important. Why? Because we are still covering the basics of audit, and at the intermediate level they ask a lot from the basics portion, guys. Okay, so what could be the benefits of auditing? I mean, why would anyone get the audit done? Okay, if it is a statutory requirement, also if it is a voluntary audit, also there are certain benefits which is going to accrue if you get your financials audited. What are those benefits? Let us understand. It says high quality information. Number one, audited accounts provides reliable and good quality information. This assures users, see again the word users, this assures users that the information is trustworthy and it follows global auditing standards. So let's say the bank, Chintamani's bank manager will be now able to rely on the audited financial statements. So number one says this assures user that the information is trustworthy, or I can say the heading is what? High quality information. Just remember trustworthy information. When I say high quality information, remember the word trustworthy information. Then is it going to boost up the shareholders' confidence? Sir, shareholders put their hard-earned money in the company. Who runs the company? It is the management who runs the company. What if the management is taking decisions to benefit their individual, directors and managers? But the money is whose? Shareholders. So shareholders, if they get audited financial statements, they would be able to trust. They will be able to have more confidence that, yeah, the managers are working not for their personal gains, but keeping in mind the shareholders' interest. Okay, so let's say shareholders who may not be involved in the daily affairs of the company, they rely on the audited financial statements to ensure that the financial information is accurate and trustworthy. It safeguards their interest. So when I say shareholder, just remember it will safeguard their interest. Okay. Now, guys, again, I told you, see, misstatement. Okay, let's recall the word misstatement. Misstatement means what? Anything which is wrongly stated in the financial statement, right? And we discussed it very clearly that misstatements can either be because of fraud or error. If an employee or management on purpose tries to manipulate the financial statement, it is fraud. However, if it can be on account of clerical errors, etc. So misstatement can be either because of fraud or error. But guys, let's say, imagine now you are an employee of the company, okay, and you had this thing in your mind that the company has so much of cash, let's take out some cash and keep it in your pockets. But then when you know, hey, if I do that, I'll be caught. Why? Because the auditor will probably, when once he's checking the financial statements, he will see that there is a shortage of cash. The accounts will not tally. So he'll get to know about it. So what I'm trying to tell you is the objective of audit is not to detect or prevent fraud, but please understand, again, the objective of audit is to what? Just to express an opinion whether the financial statements are giving true and fair view or not. But in order to give that opinion, I'll have to check the financials, and when I do that, I might come across some frauds which has happened in the company. Yes or no? I might. Okay, so the point says fraud prevention. The auditor serves as a deterrent. So now the employee will think twice before committing any fraud. Hey, what if the auditor catches me? Hey, what if I get caught? Okay, my life, my career would be spoiled. So probably it will act as a deterrent, okay, for any employee. So the audit serves as a deterrent for employees against committing fraud, as there is a fear of detection during the audit process. They would now fear, what if my misdeeds are actually, unveiled in the process of audit. So what are the three benefits we have covered? Okay, just quickly recall. High quality information, let's revise. Shareholders confidence will go up, and it is also going to act as a deterrent for fraud. Employees will think twice before indulging in any sort of fraud. Then tax determination. Guys, in India, what happens is, when you earn money, of course you have to pay tax. Okay, what are you saying, sir? We have already covered income tax. Okay, I know, guys. All right. Government, okay, will be able to trust your financial statements more when it is audited. Else government will say, hey, no, as per us, your income is 3 lakhs and you have only paid tax on 2 lakhs. But then if it is audited, if it has been signed by a chartered accountant, even government starts placing trust on the financial statements. So audited financial statements ultimately helps in determining the tax liability also, because if the auditor puts his signature, that means correct amount of provision taxation liability has been arrived at. Okay, so it says government authorities use audited financial statements to determine tax liability for businesses. Next, credit decisions. That means the bank is not going to give you loan just by looking at your face, right? If they get audited financial statements, they would be able to assess your credit worthiness. They will have a look at the financial statements, and they will be in a position to determine whether Chintamani, to whom loan is supposed to be given, will he be able to repay the principal and the interest? Does he have the repaying capability or not? Okay, so the banks also are going to only extend loan to you or Chintamani, let's say, when the financials are okay. All right, so lenders and bankers rely on audited financial statements to make informed decisions about whether to lend money to a particular entity. Then this was fraud prevention. Please be very careful. Audit serves as a deterrent for employees against committing fraud, as there is a fear of detection. However, this one is fraud detection. If, let's say, still somebody has done a fraud in the company, so maybe during the course of audit, that fraud will be uncovered. So it says fraud detection. Audits can uncover instances of fraud or errors in the financial reporting. Don't get confused. Okay. And finally, control review. Again, control review. Number one, guys, who implements internal controls in the organization? It is the management will implement internal controls in the organization. Why will they implement internal controls in the organization? To ensure their business runs smoothly, to ensure there is no fraud, to ensure that the financial statements are correct. Okay, so controls have n number of objectives, right? Now Sir, during the audit, do you as an auditor check the controls? Are we going to see the controls? Yes, 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 we are going to see the controls. Okay. Now, guys, if I see a particular control and it is not functioning properly, let's say it is not operating well, just in very layman's terms, imagine, let's say there are certain CCTV cameras, okay, and I was auditing, I saw the cameras and all, and then I realized, okay, these two cameras are not working. Am I supposed to give about this in my audit report? No. Why did you even check the cameras, etc.? Sir, I just check internal controls to assess whether the financial statements, the chance of, or let's say the risk of material misstatements in the financial statement. Okay. So please understand, I don't check internal controls with an intention to give an opinion on internal controls. I check internal controls because that would help me to determine the probability of misstatements in the financial statement. If internal controls are really good in an organization, everything is automated, they have amazing controls, the chances of misstatement in the financial statement would be low. This is why I assess internal controls. But guys, now you are an entity, you are getting your audit done. I would check your internal controls. Yes or no? Yes. Let's say I found some discrepancy in the controls. I found that the control is weak. Can I give you a suggestion that, okay, rather than this, you should be doing this. You should make a BRS every day. You have so much of transaction in cash and it is going to be very difficult to reconcile bank and cash. So do it on daily basis. Can I give, as an auditor, can I give you these suggestions? Yes. And when I give you these suggestions, will you be able to basically improvise your controls? The answer is yes. Okay, so one more benefit which the client, which the auditee, the client, okay, will have if he gets the financials audited is the controls will be reviewed. Okay, so audit reviews the existence and effectiveness of various controls within an entity, helping identify and address any deficiencies. Again, I'm telling you, if there is a deficiency in the control which management has implemented, let's say they don't do the they don't account for the cash properly, they don't do the counting of cash. So I told them, hey, you have to do it on a daily basis, you should be doing it. So it's an advice, it's a suggestion from the auditor, and then it can improvise their entire process, right? However, I'm again going to repeat this, guys, we only assess their controls so as to see, so as to determine our risk of material misstatement. We don't comment in the audit report, we don't give any opinion on internal controls. We will only write in our audit report, we'll write we have assessed the internal controls, okay, but we don't give a opinion on internal controls. We only assess internal controls so that we are able to determine ROMMS and accordingly our audit procedures, our nature, timing, and extent of audit procedures. Okay, now if you are confused, don't worry, we are going to cover it up again in detail later on. Okay, so what are the 7 benefits, guys, for the timing? Number 1, high quality information. Second, shareholders confidence. Fraud, we have 2 points with respect to fraud prevention as well as fraud detection. Then tax determination, credit decisions, and control review. Okay, all right, so 7 points. Do remember this, very easy. All right, now yes, we have 2 more topics with respect to audit to cover. Okay, the basics. Now, appointment of auditor, who does it? So we have learned so much. Okay, and then if you go back to the audit process, it starts with appointment of auditors, and I did tell you this then also. Who does the appointment of auditors? Now, in Companies Act, it is very well mentioned. If it is a company, it is very well mentioned who is going to appoint the auditor. In case it is a first auditor, it will be appointed by the board of directors. In case it's a subsequent auditors, the shareholders will appoint the auditor in the AGM. You all know this section 139. So we are sorted with company, right? But what if it is a firm? Let's say it's a partnership firm. Now, Partnership Act rather doesn't specify any particular requirements with respect to the appointment of auditor. So the partners of the firm will of course appoint the auditor as per their choice, right? Similarly, I mean, let's say if income tax audit has to be done, if I am a sole proprietor and I need to get my financial statements audited in accordance with the Income Tax Act, my turnover is 3 crores. So I need to get my financial statements audited under section 44AB. Now I will be choosing an auditor, right? I'll have to choose one auditor, and the auditor is going to prepare a report, and that needs to be given to the income tax department. So income tax law is silent. So I can just go and approach any auditor, and probably if he agrees, he'll do my audit. Okay. So let's see who, very simple topic about appointment of auditors. In case of private companies, who does it? the owners or the shareholders appoint the auditor, right? This usually happens during AGM, where shareholders who are the owners make the appointment. However, the first auditors, all of you know, it is appointed by the board, and the subsequent auditors are appointed by the shareholders. What if it is a government company? In government companies, again, you must have studied this in company law. The appointment of auditors is done by CNAG, Comptroller and Auditor General of India. Okay. In case of firms, in case of a firm where there are partners, the partners themselves appoint the auditor. But Partnership Act is silent as to how the auditors needs to be appointed. Like Companies Act tells us everything in detail, right? How the auditor needs to be appointed. How will recommend the auditor, audit committee, then board, etc. You must have covered them in the subject of company law. Okay. All right. Now, the point is, one more point I have to tell you. Let's say appointment is done, but ultimately, who is the auditor going to give his report to? So if it is a company, the report is going to go to the shareholders. Okay. So the outcome of audit is written audit report, in which auditor expresses an opinion. The report is submitted to persons making the appointment. Generally, to the persons making the appointment. In case of companies, these are shareholders. In case of a firm, it is given to the partners who have hired them. That's it. Okay. So not very important, but yeah, appointment of auditors, I am assuming that you have covered already in detail in your company audit chapter also of company law. Okay. All right. Next basic question again. Okay. Qualities of auditor. What should be the qualities of auditor? If you happen to be the auditor, what should be your qualities? Okay. Let's understand this now. Number one point. It says, yeah, number one, you have to understand the financial matters, understanding of financial matters. Now, an auditor deals with financial matters in business which are prone to human errors and fraud. So imagine, guys, if I am the auditor of a retail store, they are into retail business. Okay. So if I am the auditor, I need to have a deep understanding as to how that retail business operates. Then only probably I'll be able to do the audit properly. If let's say there are discrepancies in sales records, or let's say there is a discrepancy in inventory, the auditor's understanding of financial matter will identify these errors and frauds. Else, if I don't know about the business, I'll not be in a position to find if something is wrong. Okay. So the number one basic thing, and we discuss this, guys, in audit process also, obtain understanding of the entity. So first quality of auditor is basically you have to understand the financial matters. You have to understand the items of the financial statements. Okay. Then we are going to talk about some personal qualities. Personal quality like tact. See, let's see the word caution, firmness, good temper, integrity, so many things. Clear headedness is are the qualities of an auditor. You have to have these. Tact basically means how to deal with people, let's say. So you need to have the tact while, let's say, you are discussing issues with the management. You found something wrong in the fixed assets, now you are going to discuss about it with the management. So tact is needed when discussing, let's say, potential issues with the company's management. Okay. Caution is essential to avoid overlooking critical things. You have to exercise caution. You have to be careful while you are doing the audit, so that you don't miss out on any of the important things. Okay. You need to have good temper. Good temper helps to maintain positive working relationships with the client. It shouldn't happen that you are always arrogant, always angry. No, you have to maintain a good temperament. Okay. All right. Then you have to be patient. You have to have clear headedness, and then you have to maintain your integrity also. That means honesty. You will not be biased. Okay. So all these are personal qualities that the auditor should have. All right. So what are the two qualities we have covered? Understanding financial matters. You need to understand the items included in the financial statement. Then personal qualities. Also, guys, you need to have the business acumen. Okay. All the qualities that make a good businessman also contribute to making a good auditor. What does it mean? Now, let's say if I am doing the audit of a tech startup, so I must understand what all challenges will this startup face, what could be the opportunities for this particular startup. Okay. So I need to have that business acumen. I need to understand the business. Accordingly, I'll be able to do the audit. Okay. Then we have already covered integrity and independence. It means you have to be honest. You have to be independent. Perhaps this is the most important requirement of an auditor. Okay. Then expertise and knowledge. You need to be expert. But I told you guys, you have to have expertise. But you can have expert knowledge as an auditor only in accounts and auditing. Okay. All right. So the auditor must possess expert knowledge in accounting principles and techniques. Okay. Expertise and knowledge. Then technical training. In addition to personal qualities, technical training and education in auditing are necessary for the auditor. Now, I have a very important thing to basically tell you guys. Now that you are in CA Inter, you must have felt after clearing CA Foundation, you must have felt so relaxed that, okay, you are one level down and, just two more levels, CA Inter and CA Final, and then boom, you are a chartered accountant. Okay. And then you must be thinking that, yeah, once I become chartered accountant, my life will be sorted, no more studying. Okay. Probably my life would be secured. I'll get a good job. I'll start my own practice. All these things might come into your mind. Yes. And that's true. 100% true. And you should be happy about it. You should be dreaming about it. But let me just give you a reality check that yes, all these things, all the dreams are true, are going to be true 100%. But then once you become a chartered accountant, if you end up having this feeling that once I become a chartered accountant, I don't have to go through the books, I don't have to study at all, then this is a wrong perception in your mind. We as chartered accountants, we still have to read a lot of books, keep ourselves updated. Law changes every now and then, so we need to go through the provisions of the law and then keep ourselves updated. If you don't read, if you don't update yourself, you will not be able to do good audits, you'll not be able to do proper audits, because you have to get well versed with the laws first. If there is let's say an update in the GST, how will you give consultancy with GST if you are not updated, right? So always remember, technical training, I mean, yeah, you have to gain some training, and education in auditing are necessary for the auditor. So of course, technical training and all basic training you will be given through the curriculum when you join the office. However, you have to keep yourself updated, guys. Okay, so technical training and education, see the word education. Now, critical review skills. Auditors constantly critically review financial statements, and for this task to be effective, the auditor must possess expert knowledge. So you need to have some review skills as well. Okay. So with this, the qualities of auditor is over. 7 points, guys. Remember, what are the points? Number one, understanding of financial matters, very, very basic thing. Then your personal qualities, you need to know about the business also. You need to maintain integrity and independence. You have to have expert knowledge in accounting and auditing. Okay. Then you have to keep yourself updated through the trainings and continuous education, and you need to have review skills also, critical review skills as well. Okay. All right. So yeah, we are done with the 7 qualities of auditor. Okay. And in this basic chapter, guys, of introduction to auditing, in this very basic chapter of introduction to auditing, we are now left with our last topic. What is the last topic that we have to do? It is basically how is audit related to other disciplines or other subjects? How is there even a connection between accounting and auditing? Is there a connection between law and auditing? So what is the relationship of auditing with other subjects? Okay. What is the, in Hindi we say rishta, right? Ye rishta kya kehlata hai? What is the rishta of auditing with accounting, with law, with behavioral science, etc.? Let's quickly read it. Okay, we'll just read one line about it. So guys, is accounting and auditing related? Of course, yes. If you as an auditor don't have knowledge of accounting, how will you check whether the management has prepared financials properly or not? You need to have basics. You need to have good knowledge, not basics. Forget about basics. You need to have expert knowledge in accounting. Then only you can do the audit. So accounting and auditing have a very gehra rishta, deep relationship. Okay. So auditor provides opinion on the financial statements. For this, he has to review the financial statements. Auditor should have thorough and sound knowledge of what? Generally accepted accounting principles before he can review the financial statement. So you need to have expert, thorough understanding of the accounting principles. You need to know how the financials are made. You need to have, knowledge of accounting standards, etc. All right. Does auditing have any relation with law? Yes, I told you, if you are doing the audit of a company, right, you need to know the provisions of the company law. Then only you will be able to say that, yeah, the company is complying with the provisions of Companies Act or not. If I am doing the income tax audit, I need to know the provisions of income tax. Then only I'll be in a position to say or give an opinion whether my client has complied with the various provisions of the income tax law or not. Remember, the subject law, company law or tax law, is being taught to you so that you get well versed with the provisions and accordingly do a proper audit. Ultimately, guys, you are going to be the auditors. This is going to be your main work. Okay, all right. So auditing involves examination of various transactions from viewpoint of whether or not they are in tune with legal provisions. The auditor should have good knowledge of business laws affecting the entity. Okay, business laws, you were taught so many business laws in your foundation also: Contract Act, Negotiable Acts, taxation you are studying in intermediate. Okay, so you need to have knowledge of law. Behavioral science, now what does this mean? Behavioral science basically means the art of dealing with people, art of dealing with your clients, art of dealing with your own team members. You need to know how to tackle them, you need to know how to manage people, you need to know how to talk to them. Very, very crucial and important aspect. So the knowledge of human behavior is very essential for an auditor so as to discharge the duties effectively. During the course of work, the auditor is required to obtain information and explanation from the client staff, and he needs to interact with the organization staff in analyzing the financial uh, figures. The auditor should have the tact of getting along with people and obtain relevant information to meet his audit needs. And he has to direct and supervise his own staff. So behavioral science is not just, for your own staff, I mean auditor's own staff, and also for the client. Okay. And what does behavioral science means ultimately? Just highlighting this again, it is basically the tact of getting along with people. I mean, how to talk to the people, how to communicate with them. We have to deal with two resources, two basically categories of people: our client and also our own team members. As an auditor, my own team members, my junior chartered accountants, my articles, etc. So this is behavioral science. Okay, next, statistics and mathematics. Sir, what are you saying? I mean, mathematics, CA foundation was also so much of trouble we had. So do we still have to study maths for our intermediate? No, 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 that's not the case. But statistics and mathematics can also be useful in your auditing also. Okay, now I told you this, for example, if I say an auditor, let's say if a company like Airtel, I am the auditor of a company as big as Airtel. Okay, there are thousands of transactions in it, tens and thousands, lakhs of transactions. As an auditor, I'll not be able to check all the transactions. I'll have to pick up certain samples. They will show me, give me the list of all the transactions. So I need to have knowledge of statistics to pick up the right transactions, right number of transactions. Okay, so a bit of knowledge of statistics and maths, of course, is going to help. Okay, then we have data processing. Many organizations now carry out their financial accounting activities with the help of computers. Guys, you need to have knowledge of the systems. Why? Two things: your client, these days everyone is maintaining accounts in the system, so how will you check it? You need to have knowledge of the systems, right? And then when you are doing the audit, you might also use systems. Let's say you are using Excel, you are using Word to form your audit report, etc. So you have to use the systems as well, right? So it says there's a point: EDP, electronic data processing. Auditing is a growing discipline within the auditing, emphasizing the importance of understanding technology and data processing. So as an auditor, we have to have some understanding about technology also. So technology and auditing has also a relationship. Do you need to have knowledge of FM? Yes, that is why it is there in your subject, one of the subjects also. But again, why as an auditor do I need to know about financial management? So that you know about the various ratios, and then you are able to comprehend the financials of the client better. When you compare the ratios, you can do comparisons, you can do analytical procedures. Okay, so the auditor is expected to have knowledge about various financial techniques such as working capital management, fund flow, ratio analysis. These are chapters of your financial management. Probably many of you must have not yet started, don't worry, but yeah, these are things which you are going to study in FM. Okay, these provide value added services to the client. The main thing, FM, will help you to understand and evaluate the financial statements in a better way. Like for example, you see the GP ratio of this year, GP ratio, gross profit upon sales, and then you saw the GP ratio of the last year, you are comparing it. Hey, why has the GP ratio gone up this year so high as compared to last year? It has really gone up. So all these insights are going to help you understand and plan your audit in a very well manner. Okay, so FM, the knowledge of financial management, helps us in understanding the financials better. And then you covered economics also, it was there in your CA foundation. So economics means, it says, before conducting the audit, auditor needs to obtain knowledge regarding business and economic environment affecting the client. I need to know the environment of my client, I need to know the situation of my client. Okay, and then economics basically is, of course, it means environment. Okay, and at the same time, we are also focusing on the different economic activities like purchase, sale, income, payments, etc. Hence, economic concepts are required to perform audit in a meaningful way. So, very small topic, just give a plain reading, guys. In the old course, it was really very important, but in the new syllabus, the content is not much, though I have given a few extra lines only for your better understanding. So, have a read at this particular topic. And now, if you see with this, our first chapter, introduction to auditing, okay, is over. Very simple, extremely simple. Okay.